regulation, the list goes on and on. And they're all valid things. They're all things that we live with in different forms and to different degrees, but it's pretty universal. And so added to that context, which I think is different today than when I started in the industry, the internet was just coming to be, and everyone was like, oh, agents and brokers are going to be gone. It's all going to be, these exchanges online. And look, that didn't happen. I don't think that will ever happen. Lots of new tools have been born from that, but that didn't really play out. That period of disruption was about the threat to agents and brokers. While those sorts of themes are still there, what's different with today's period of disruption, and not all insurtech is disruptive, a lot of it is enabling and helpful, but there is some disruptive stuff going on that is really about the new kinds of carriers coming to be. So we've always had new carriers, that's not a new thing, but they were sort of the same old style and structure and background, just newer, years of incorporation. What's different today is you have tech-enabled or tech-first or fully digital carriers that are free from a lot of those like legacy constraints and those structural constraints. And a lot of them are founded by software engineering people, not necessarily insurance folks. They have plenty of other constraints and things that they need to contend with, like hubris. You often hear sort of to the point we were opening with for people who joined early that, insurance isn't cool, it's behind, it's slow, it's broken. Insurance companies don't know what they're doing, like all of those kinds of catchphrases. And look how much cooler we are. Well, then they find out actually it's really hard. It's hard to make money as an insurance company. And so they've got other complications to deal with. But that was the framing for what I kept finding in every carrier is we feel stuck. We got lots of pressure from the outside, from these new companies. And by the way, customers are doing everything digitally, responsively, the way they want to do it in every other aspect of their life now. It's not just a couple of cool things here or there, it's everything. And so the idea of giving us a pass because we're slow or behind or whatever, that ain't going to fly anymore. And carrier after carrier kept sort of feeling downtrodden and almost like they'd given up hope. And I will say, for those of you who know Hi Marley, they didn't go out of business because I joined them. They're still kicking, and they've had quite a bit of success and lots of new carriers working with them, which means I was able to navigate that conversation successfully with the carriers I was talking directly to. The other side of my life outside of insurance is self-help. And what I don't like to do is just do one-on-one coaching, or maybe I'll speak at an event and just help those people right there. I want to broaden that impact out. And I felt the same thing here. It's not just about me having a one-on-one conversation. I want to spread this message that actually we can still innovate. We have those constraints, but they're not going to stop us per se. And there's new ways to try to do things more flexibly, easily. And there's change that we have to make, but we can move forward. I wanted to tell that story broadly. And that was sort of the genesis of the book. And the way I like to tell those stories and give that inspiration is through stories, through case studies. So I left Hi Marley at the end of the year as an employee. I still advise them, but I started reaching out to carriers in my network and to people. Tony lies, he did have a hand in the success and the creation of the book by making a lot of really valuable connections. It's a great relationship-based industry. So lots of people made a lot of really valuable connections to different people at carriers who were willing to talk about what they did. And that's what the book is. It's a series of firsthand case studies of carriers who have innovated and evolved to respond to those external pressures from customers, from new entrants, despite the constraints that we all face. And in each of those stories, there are lessons. And across all the stories are three really strong lessons that transcend everything about what we do. And like, while it's a book about innovation and technology, it really isn't. It's really about values and leadership and culture. And so those lessons are not which cloud provider to go with or what, I don't even like what AI solution. It's not about that. It's about where you turn to change your organization. And the three big themes, I'm going to give away the whole point of the book, so then you don't have to go buy it. The first one is about customers. So how are we engaging with our customers? Are we genuinely listening to what they need? And while we may hear what they need, are we actually taking that in and living up to that? Or are we interpreting it through our own eyes, or maybe what we're already doing, or justifying what we're doing, or thinking, you know what, they don't really know, or they don't understand, so we're going to do it this way, or we could never do that. They don't get the constraints, so we're going to do it this way instead. And they end up not valuing it. So really listening to your customers. And, for some of us in the industry, we may not have a direct connection to those customers. There could be an agent or broker in between, or maybe we're in the risk management side and we're providing services to carriers. And so it's not our customer per se. We're there on behalf of someone else and we have a direct interaction with them, but they're not our customer. And so that has helped us to feel more disconnected and maybe have a tougher time listening. But, even the direct writers struggle with that. So there's a lot in the book across every one of those cases about hearing your customers and genuinely speaking to what it is they need. One of the best first examples is from CSAA, so the largest AAA carrier based out in California. It was about improving rental coverage. And for years, the carriers and the rental providers have been working really hard to make the process of getting your rental coverage and getting that car much better, much easier. But the question they were trying to solve is, how do I make the rental experience better? From the customer side, no one was asking, how can I get my rental car coverage in an easier way? They're asking, how do I get to work today now that my car is totaled or in the shop or whatever? And that's what CSA started to realize is this isn't about us asking about the thing we're already doing. This is about us putting ourselves in the customer's shoes or listening to them firsthand when they say what their actual problem is, and then working on that. And their problem is, how do I get from point A to point B when my car's out of commission? Not how do I rent the car 3 minutes faster or have an easier pickup or drop off experience, which are all good things, but that's not really what they want. So that's the first one, is customers. The second piece is your people, your employees. And this is one that I've seen a lot of talk about, a lot of companies patting themselves on the back about, and some doing some great things, but a lot of them, it's more lip service than anything. So, we've all heard that, oh, we're non-hierarchical and we're a caring meritocracy and whatever, great recruiting phrases you hear. But how much are they really engaging their people, and how much is that engagement an empowered engagement versus, we spun up these strategic working groups and we won't let anyone above director level in them. So it's, it's the people, it's not the leadership. And they have these great ideas, and then we let them come into the C-suite and they get to present and we clap for them and they get $100 gift card to Amazon. And yeah, I don't know what happened to the thing they talked about. Or yeah, that was a nice idea, but you know what, we can't do that. And they didn't understand it. So we're going to do this instead. You see that over and over again. Or someone fails. One of the projects doesn't come up with something good, or they try it and it doesn't go well, and you never hear about it again. Maybe you don't see those people again, which is also not good. You can't just have it be about the wins. So what are you doing to genuinely engage your people, and more than just engage them, empower them to actually be a part of and drive and come up with what that change is? Because don't forget, they're the ones living it. They're living firsthand with those customers, with those agents, brokers, insureds, third-party vendor, like whatever it is, they're the ones interacting with them, not the C-suite. They're the ones who are living with all the systems and the good and the bad about it and the processes and procedures. They're the ones dealing with the training and its benefits and the shortfalls in it. So they know as much as your customers do. They know what needs to change, and having them work on solving it means you're going to come up with something that's doable, that's impactful, and you already have champions in the business because the people who need to make the change are the ones who came up with it. And you've already got people who are a part of that new state. So they're going to be there celebrating it. So you see that story again, consistently across carriers that are successful in this, is really giving their people that power. And I think for a CEO or the rest of the C-suite, it's about stepping back and being an inspiration and an enabler to your people rather than being the person who has to be the winner. And that's a tough thing for many CEOs to deal with, that loss of their importance. But I think humility is probably the best trait for any CEO in this regard. Step aside. It doesn't have to be for you. My line is sort of like, basically make yourself irrelevant, take your job away. You can still have your job, but you should not be the most important person in that company. And if that's how you're thinking, you're not going to engage your people. They're gonna see through it. And then are they going to raise their hands? Are they going to contribute? Are they going to take it seriously when you talk about the new direction? Probably not. So that's the second one. And then the last one is about focus. And this is a broad issue that hits both the insurtech and the traditional side, really everybody. Having lived in an insurtech, I can tell you firsthand, shiny object syndrome is a serious problem. There's all kinds of things you can do. And every carrier you talk to is like, oh, well, we need it to do this. And so, you'll spend a day talking to customers and you have 800 new directions for the company, and you can whipsaw your people around and make the engineers change what they're working on and all that. And you see that on the carrier side as well. So many different solutions you can look at, so many different things you can do. How do you know which one's the right one? How do you know if the path you're on is the right path to be on? And there's a lot of detail in the book about how these different carriers chose what they chose, structure their projects, and saw them through to fruition, while also keeping their mind open, but not allowing themselves to get off course from the ultimate thing they're trying to deliver. One of the most important pieces of that is the starting point. So it's never about technology. That was one of the realizations. So USAA is the last case in the book, and they talk about a shift in their innovation portfolio that had a lot of technology-based solutions or technology-based projects. So it was like blockchain, there's a project. Like, no, that's not. That's a technology. What is the issue you're trying to solve? And if you structure your projects or your innovation around those things you're trying to make better, technology can slot in and pop out and be replaced and change. The processes can evolve and change. So going in with this sort of, again, to your customers and your people, this end result first mentality, this problem or this opportunity first mentality, and then fitting the tools into that, working delivery through in a much more purposeful, short-term, agile way, and iterating, learning, and growing. That's a really consistent theme throughout. So customers, people, focus were the universal truths across every case. And then each case had a lot more richness of things that were really specific to it. Personal lines, commercial lines, largely set in the US, although a lot of these things really are universal. I just did a podcast in Nigeria, and I didn't know how that would land and whether these things would translate. And, it's different, but it's not. A lot of those leadership values are the same. So I don't want to ramble too much more. I think I've done plenty of that. I'd love to hear thoughts from people or questions or anything you want me to dig into more.
Brian, I think it was interesting that you talked when you were talking about sort of the insurtech world and the people that don't come from an insurance background, and one of their problems, or in some cases, is hubris. That they think they can come in and and it's also interesting. Just you're talking about not just who's got the best idea for a new mousetrap or something like that, but that it's an attitudinal thing. And
Yeah.
I wonder too, is it kind of a two-part question, like do you also see hubris on sort of the incumbent side, as far as I'm wondering if you see hubris which is countered by sort of like over the past 5-7 years, where almost like a panic to innovate, or not be left behind in some sort of innovation or something like that.
Yeah. So I think that's absolutely spot on. There's hubris on both sides. What it boils down to for me is being comfortable with not having the answer. And even if you're certain you do, making sure of that. So Hi Marley is a really good example for me, because I was at a conference where I gave a talk, and then I sat down at lunch, and this guy sits down next to me who worked at Aon and had scribbled out Aon and wrote Hi Marley on his badge. And he's like, I'm leaving my job at Aon. My friends and I are starting our next startup. It's going to be called Hi Marley. We're going to be texting customers in claims. And I was like, that's awesome. I don't text. Can you, I'm eating my pasta or whatever it was. So, I was much nicer than that, but I'm inside. I'm just like, I don't text people. I don't see the point. We do like liability and E&O and like, we're not going to text, like texting with your customers. Our CFO just got nabbed by the FBI. I'm like, this is never going to come to our space. So, smile, nod, and enjoy lunch and move on. We had a really good conversation, exchange information, but largely it wasn't for me because I didn't see the point. But I also recognized there's lots of points I don't see. They're still really good points. So when I got back to Atlanta the following week, I told my team about it, and they were like, you're an idiot. This is brilliant. We need this. We can't get anyone on the phone. We can't email. It was so clear to them. And it was so clear to me that there's so much I don't know, because I'm not living in the front lines. I'm not handling those claims. I'm not hearing directly from the customers on any sort of regular basis. So what do I possibly know when it comes to decision making? But I had that hubris. I just knew better that I don't have all the answers. And I think that's really important. And you do see that whether it's enabling technology and new ways of working, that a lot of people, it's different. It's uncomfortable, not interested, right? Doesn't mean they shouldn't be interested, but they're not. Or in judgment of some startup carriers. And this is, I mean, this is across the board in any industry. The new players versus the legacy players. There's always this like, they don't understand how hard it is. You know, they're making all this noise. They're fools. They're, oh, look at their financial results. You know, look at Tesla losing money all the time. Well, Tesla is the most valuable car company now. Whether they should be or shouldn't be is a different story, but you can't just write them off. Same thing here. You know, you've got, I'm not going to name startup carriers who, you know, started every ad with insurance companies suck, which is really nice. And sort of bad mouthing the legacy industry or the incumbent industry as part of their marketing slogan, which frankly, I hate. It's not necessary because we're all trying to help people get their lives back together at the toughest moments in those lives. I don't think disparaging anyone is the right answer, but it's also really ignorant because it's complicated. And I also know incumbents who looked at them and said, oh, those idiots, they don't, you know, let them make their splash on LinkedIn and with the millennials or the mobile phone generation. And they're going to be a flash in the pan. They're not going to last more than 3 years. Someone will buy them out just to shut them down, or, you know, they'll go public and then they'll crash. And it's like, yeah, you know, all those things may be true. And there may still be something in what they're doing that you should pay attention to, whether it's them or anybody else. It's just like when you get feedback on a claim, I'm claims biased because that was my last home, but you get feedback on a claim from an angry insured. Maybe you denied the claim or they didn't get what they wanted. And I would see it all the time. And adjusters like, oh, you know, I think they're committing fraud. I think they're kind of stretching the numbers here, or they're just mad because we denied it. And like, yeah, that all may be true. And there may still be something in what they're saying. So if they're committing fraud, I promise you there's stuff to learn in that interaction. And it may not be all against them. And if they're stretching the numbers, well, why did they do that? Is it just about money, or are they angry? Do they feel like you were their adversary and so they got into a war with you about it? And it was partially about principles, not just their bank account. These are all things worth looking into, regardless of all the reasons why we might just dismiss it. So I think hubris is alive and well everywhere. And it's probably the biggest thing that stands in our way, full stop, as an industry. And that includes hubris about the negative. Oh, we can't. That's hubris too. You've given up because you know better before you've even tried.
I have a question for
Yeah.
you, Brian. So from your talks with the insurance companies and the carriers and the case studies that you did, you talked about failure and how people saw that if someone tried something and failed, they sort of disappeared.
Yeah.
Do you have any insights for carriers or agents on how they can incorporate that ability to fail so that they can grow and evolve?
Yeah, absolutely. And I should give the names of the carriers so people have a bit of context of names: CSAA and USAA, the two SAAs on either side of the coin. But in between them is CNA, the State Compensation Insurance Fund of California, or SCIF. Employers, AXA XL, and Ohio Mutual. Tony, I don't know if off the top of your head, if you think I've missed anyone. I think I hit them all. I think that was 7. I try to say them in order so I can like picture the table of contents in my head, and I did it out of order. But you know, large, small, public, private, mutual, international, regional, et cetera, a mix. And I did hear some pretty universal things in their views about failure. It's a great question. The SCIF example, the State Comp Fund, really stands out to me because they talk about their innovation pipeline. So they literally train their entire company. And I mean, 100%, like administrative assistants, clerical staff, not just the underwriters and claims handlers, not just the innovation people, everybody all got trained on design thinking, and everybody participated in workshops and teams to come up with ideas and really fully bake them, and then to actually move some of them forward. So they had, I think it was 30 ideas came out of this process. 18 of them are either live or in production or moving to being live now. That number may be higher. That was like as of January or February. But what about those other 12, right? Because we can focus on the 18 all day, and that's what we all do. Well, the other 12, they learned a ton from them, and they talked about them. And the people who did them, then even though they didn't work out, the information was shared. This is what we looked at. This is why we looked at it. This is how we tested it. Here's where it went wrong. Here's where, you know, if we were to do it again, we'd change this. So to see them as learning opportunities and not shaming opportunities is really the critical piece. Luckily no one in this call has ever failed before, which is great. But if you have, or someone who has, the worst thing you can do is fail, beat yourself up, and not grow from it. The best thing you can do is learn from it. So every failure builds us up. I mean, I had a professor in business school who's like, he was teaching this top leadership team, a top leadership course. And he's like, the worst thing you can do as a CEO is have someone on your team who's never been tested. You don't want the person who just like job after job, everything was a huge success. There's no learnings, there's no failures, because you don't know how they're going to be when the chips are down. So these failure moments are our most powerful, and everybody has them, personally or professionally. So I say embrace them. And then the question is, don't beat yourself up for it. Reflect on it. Why did that happen? What could I do differently? The CSAA case, they talk openly about it. They're like, look, it took us this long, which is really long and probably too long. And if we were to do it today, we would have been faster, but we got stuck. We got stuck on trying to build internal consensus on it. We got stuck on, defining these things, the tech side of it, because it was new to them and it was new to Lyft, who they partnered with, doing rideshare credits instead of rental car. So much of it was new, and they had none of the kind of institutions in place internally for it. Like their innovation team was brand new. So they didn't even have an innovation process yet. They designed it as they went through this project. And they were like, yeah, it was messy at times. There are things that we did then that we would never do today, but we had to go through that to see that like, oh, that didn't really work. Or, we did it, it was painful. What do we need to set up instead? So taking them as learning opportunities. And again, to the humility point, like a really good leader recognizes that and wants to dig into it in a praising and an educational way, not in a shaming or silence way. And I've been at carriers where, core system projects not going well, and the CEO opens the annual all staff coming together in Boston for the big meeting event with, we're going to have great talks today and blah, blah, blah. And I know everyone's frustrated about the system. I don't want to hear a single thing from any of you about it all, like in the most stern voice, shutting everyone down. How do you think the rest of that day is going to go? You think anybody's going to ask a critical question of a single person who gets up there, especially the CEO, or beyond that day? You set the tone for the wrong thing. And by the way, that project continued to be a failure it was supposed to be delivered in like 10 months. At least 3 years later, it still wasn't delivered. But if you ask anybody, it was all perfect, even though it wasn't even live, because you weren't allowed to talk honestly about it. And of course, they never learned through that process. So they just kept struggling in darkness instead of coming together to resolve. So really common failure. And it does take that sort of educational first view of it, I think.
Thank you.
Yeah. Abby.
Do you have any suggestions for the kind of cultural change that seems to be in the background, to get the CEO who does not approach it as, I don't want to hear about the problem.
Yeah.
It's all just smile and pretend it's not happening. And I think that's so prevalent in a lot of our culture. We all have to be saying it's going great and projecting that in so many things.
Yeah.
And that does prevent some change.
Yeah. So, a couple of things on that. One is, the reason why I wrote the book the way I did, it's not all roses. They're not like terrible stories, and it's all like epic failures. Ultimately, everything comes out okay. Like you don't need to worry. You'll sleep well tonight. You won't have
Spoiler alert.
Yeah, spoiler alert. But there are tougher moments in it. There are things that didn't go as well. Things that surprised them, walked into some successes they didn't expect, and things that fell flat that, again, they didn't expect. When we go to a conference and we hear about what a carrier did, or we read the press release or the piece that went out and, whatever trade pub about it, typically everyone's telling their best story they can. So, you go to a conference and it's like, we did this thing and it was perfect and delivered on time and on budget. And the ROI, the only surprise is the ROI was even better than we thought. And you're like, yeah, right. I'm sure that's not really how it went. So I wanted to tell a more honest story. And I think that's the first step, is to see that these guys over here who are something like us, they did this thing you're saying can't be done or shouldn't be done. And it wasn't all perfect, because you may look at it and be really skeptical or have all the reasons why that wouldn't apply to you because you're seeing the roadblocks or you're seeing why it doesn't apply. But if you see a more honest story of what they went through, it's easier to break through that facade. So I think that's one piece of it. But I do think the the analog or the peer group approach is valuable, because a lot of times the answer we get is no, when actually it's, I don't know. So, I saw this in one carrier in particular around compliance, really good compliance team, but they were always very adversarial with the business. And that's not blaming compliance. That's both sides of that equation. They had started that way, and it had been reinforced leader after leader that, like, they're the people who get in your way, and they're the people who are trying to sneak around you. And you can guess which one's which. Maybe it's both. That doesn't help. So if compliance didn't know, or they were brought in so late, they couldn't really understand what they were being asked, they just said no. Why don't you bring them along for the journey? Why don't you let them be a part of the solution? And those early thought process days where everyone's getting inspiration and kind of getting religion about the issue, why aren't those leaders there? And talking honestly with them. And that might need to be a side conversation. It might need to be, thinking of different ways to appeal to them, like not putting them in a workshop may be a better idea, but finding ways to bring them along the journey of that idea and seeing firsthand that, like, no, customers really don't like this. I don't know if anybody's ever watched the Gordon Ramsay show, Hell's Kitchen, but so he goes around to these restaurants and they're all failures, and like chef or owner after chef or chef owner is like, oh, but my customers love the whatever dish. And then they cut to a scene of the people being like, this is inedible. And it's disgusting, right? But they're delusional about it. And if they would just ask and actually listen when they ask, because sometimes they do ask and then they start screaming at the customer for being fools, they're missing the point. So what if you can slowly and carefully expose your leadership to the genuine views of the industry? Maybe that needs to come from customers themselves. Maybe it needs to come from a third party. That is some of the work that I do, is talking with carriers to help their leadership see the things that they probably already know, but they're not ready to listen to. But if a third party comes, it's like a relationship. If the couples therapist tells you that you're being bad to the other person, you'll believe it. But if the other person tells you you're being bad to them, you won't. So sometimes there's a number of things like that you may have to employ, or all of the above. But it's culture change. It's not instantaneous. And so it does take some time, but it's worth investing in. And I will say success begets success. So the more you do it, the easier it should get.
You've sort of hinted along the way along something I was thinking. You sort of have, these are kind of 7 case studies which are ultimately sort of successful, and just thinking that you must have encountered, as you in your years, a lot more failures too. But I guess part of what you're saying is some of this incorporates failure, but like if things aren't done as quickly as they could. Like that. I was just thinking it might be a good sequel to have 7 abject failures.
For sure. Well, so Erin's on, she said she's working a lot in the cyberspace. So I was at Beasley in the really early days of cyber. Modern cyber policies, for people who don't know, are not just about paying for the losses or the notifications and credit monitoring and stuff. It's really about breach response. So it's more like disaster recovery kind of thing, and sending in the experts to figure out what happened to the data and get your PR people. It's a response to the breach more so than just paying the fees. It's not just an indemnity coverage. That notion didn't used to exist. And while I was at Beasley, one of our London underwriters and a broker started to talk about this idea for, it's not the money, like the money matters, but it's more like we don't have a clue what to do when this happens and we're lost. And that's not the time to figure it out. Like, where do I turn? It's like trying to figure out how do you fight fire, and you're like Googling it while your house is burning down. You don't do that, right? So we had this idea and created this policy, the Beasley breach response policy, which, not trying to sound biased, but I think that's arguably like the grandfather of the modern breach industry or cyber industry. And pretty much everyone does the same thing now, same vendors, same panel that they're all relying on. But that idea was brilliant. We were all like, wow, this is a game changer, and was such a massive failure for a good 18 to 36 months. And we had all this hype. We moved mountains to make it happen internally, and no one would buy the thing. Like, the market couldn't have been less interested in it. And cyber was still new, and not everyone got that they needed cyber, but even people who got it, who were talking about like, yeah, but if we have an event, it's not just the money, like we don't know what to do. Even they wouldn't buy it. And that's like exactly who should be buying it. And they were kind of screaming like, I'm ready, but they still wouldn't do it. So it's like, we failed. We screwed up big time. Like a couple of people bet their careers on it. Today, you can imagine their careers are pretty high flying, not fly high. But that was a case of extreme and public failure because of how much the company talked it up, and then it fell flat on its face. And some people laughed and were like, see, like they were kind of being jerks and pushing so hard and nothing happened for them, haha, which is a lovely way to feel about your peers. But they stuck with it, and they refined, and they listened to the market, and they tried to understand, why isn't it being bought? And it's really easy hubris to say like, oh, because it's too early and it just needs a few buying cycles and then people buy it. Well, yeah, maybe that's probably true to an extent, but there's got to be more to it than that. So you got to go out and learn. So take your failure and do something with it. And I will say, like, Beasley stuck with it. We didn't really see any traction for about a year and a half, and then it slowly started to build. And now that's like everything the company's known for. And they're putting their breach response into every other coverage they have. They're kind of embedding it within, and they're selling it to other carriers who then embed it in their products. So the carrier I left Beasley for, between Beasley and Hiscox, was using Beasley as their cyber solution. So huge failure, very public failure internally, public in a small circle in Lloyd's for all the people who were watching it and hearing about it, and then saw it do nothing. So that, that's an interesting one. And arguably the biggest success in the company's history came from that. So that's not in the book. I'm not sure I could get Beasley to say yes to that, but secret inside information that, yeah. And anyone who's in the space would have known, like, it was something a lot of people laughed at. And now they're doing the exact same thing.
And Beasley, just to jump onto that,
Yeah.
Beasley is now very well known for it, and they have won our Advise in Cyber Risk Award for top insurer for the last probably like 3 years, I think, because people do very much emulate the Beasley breach response services, and kind of live by their quarterly reports on what ransomware is doing.
Yeah.
I had a question that does also play into the cyber space. When you mentioned specifically the new companies coming in, like that makes me think kind of automatically of the cyber MGAs who come in and have that tech enabled view and looking at it from like the side of looking at the risk itself from an engineering standpoint. And they're also kind of becoming known for driving the prices down in the cyberspace as well.
Yeah, which you wouldn't think they could go down any further, but somehow they're finding ways to make it cheaper.
Yeah. So, I mean, is that part of the the hubris, or is that a reflection of a good way to look at that risk, or is it we're backed by private equity and we don't intend to be around for the long term? So,
Yeah, we're just trying to get acquired by someone.
Right. We're we're here till the capital runs out, sort of thing. I just wondered what your view on that was. Do you see the startups staying for the long term, like once they do realize like they what it takes to turn a profit in insurance?
Yeah. So I will say, having talked to a bunch of them and knowing several people at a variety of these, either MGAs or now they're full-on carriers. So, full disclosure, I'm biased because I like a lot of people at a number of these places, but that's part of the answer. So I think where there may have been hubris or maybe sort of like, we just need to get by so long until we get bought out. I've never seen that firsthand. I think that's an easy way to write them off. But maybe that's a play for some of them. I don't think, maybe that's behind some of their venture capital's mentalities. And, the Lemonade IPO is like, okay, now we know there can be an exit for these things. But I don't think for the founders, that's generally where they come from. And I know for the insurance people at a lot of these places, that's definitely not their mindset. It is really hard. It's hard to be successful there. You do need scale. Cyber is a weird line because I still don't think the losses have actually presented themselves as what they will ultimately be. And when and if they do, it has a potential for being so utterly catastrophic because of how interconnected everything is. I mean, I used to say if AWS, Amazon Web Services, got hit, huge tech E&O loss. And I know the underwriters on that account, so that would be difficult for them. But think about how many businesses run their tech solution either on AWS directly or all the enabling tech that, I mean, Hi Marley runs on AWS, but it's super safe, don't worry. But you know, like think about the dominoes that start to fall, then how many companies get hit all at once. And there's not a lot of different cloud providers. You sort of got 4-ish major ones between Amazon, Microsoft, Google, and Oracle. And Salesforce has a cloud as well, but it's a little bit different. That could take everybody out. And if you're like a $20 million carrier, I don't know how you survive that, because like 3 policies going to their limit is way more of a loss than you can afford in any single year at that scale. Luckily, you've got reinsurance, but what's it going to cost you the following year? And to that point, the conversation we were having at the start of this about, you know, like cat season and property reinsurance folks kind of getting excited about rate hardening. So it's a weird space, and I think you need to get to a certain level of scale, and it's not totally clear what that scale needs to be. Number one. Number two, there is a lot of room for for much smarter underwriting, and partially because we don't even know really what those losses are. So a lot of the technology in these startups is around how you assess and price that risk. Like we've all seen it with the cat models. Like, you know, big storms come through, change the models with the new information, but then the models are untested. So until the next cat season, we don't really know whether they were right or not. And you just hope there's enough time in between that we can build up the right reserves and the profitability of the business so we can weather a potentially off cat model year. I think cyber could be the same thing, but the intelligence and the tools in some of these startups, and frankly, some of the incumbents as well, that could be changing the game before there is a major loss. So I'm quite curious to watch how it happens. I think AI and ML can really help with cyber because of the nature of what cyber losses are. But then there's some interesting other tools coming out that may dramatically change the risk in cyber. Blockchain being probably the biggest one, and there's a long way to go before that's really doing something. The liability will still be there, but the risk of that liability is potentially gone on at least an extraction of PPI kind of loss. You can still have business interruption and other things, and that can be bad. But having 200 million records out and about on the dark web, there may be a point where that's just not even an issue. So I'm actually really interested in seeing what the cyber startups do. I don't know whether they'll succeed or not. I don't know whether they get bought out or not. If you don't do cyber now and you're an incumbent or a specialist, that could be a really interesting way to get into the space with the different capital structure and ability to weather those storms. So maybe that's a neat story. And yeah, it goes back to an acquisition story, but it's a space I'm watching. I do think there's probably too many cyber startups at the moment, and there are only more coming online. So there's going to be, like any tech boom, there's going to be a proliferation of providers. I mean, look, I used to search for everything on Alta Vista, and it was like one of 60 search engines I would choose from. My son looked at me and it's like, Alta, what? You know, Google didn't even exist, right? Like, I think we're going to see something similar. There's a lot of cyber startups. I don't know that all of them will be around, but I think there'll be some really interesting innovation that comes out of that whole process.
Brian, Frank Tomasello with a quick question. If we have a few minutes, curious to get your thoughts on what effect the pandemic might have on evolution in the insurance industry. Some suggest that perhaps the pandemic and associated economic fallout may serve as a catalyst for insurer innovation and perhaps insurtech adoption. But on the other side of the coin, I think there's some folks who hold that we may see instead a slowdown because of insurtechs being maybe affected by limited access to capital. So kind of curious to get your thoughts there.
I think that's a really interesting and worthwhile question. I literally, before this, was on a webinar that this was like half the discussion. So I sort of see 3 different buckets of impact here. And unfortunately, this is like the worst answer, but it depends, or it could go either way is kind of the answer on most of these. The first and the most pressing is I do see a speeding up for the vast majority of carriers around their digital solutions. And that's a really broad term that can mean a lot of things: digital claims, digital underwriting, remote access, whatever it might be. But a lot of things that were on the back burner, or they were starting to contemplate, or maybe even had just said no to, suddenly came front and center. And not every carrier, but a lot of them. And those budget decisions suddenly got a lot easier. And for many carriers, it's not just, oh, it's not in the budget, so you can't have it. Then there's a, well, do we have the money and is the ROI there? And if the answer is yes, then it's okay that it's not in the budget because clearly we have to do these things. And a great example is the simple idea of work from home. The number of carriers who didn't have the tools in place or were against it, or some had actually rolled it back. Suddenly you didn't have a choice. And where it seemed impossible, or like USA is in the book and they talk about this, they had a plan for more remote working, and something like 31 or 34%, I forget, about a third of their staff worked from home anyway, but they didn't have wide scale, robust tools for everyone to do it. They talked about putting those in place in 2021, or like sort of end of this year, they would start the work. Obviously, they couldn't wait that long. So they had pretty much everybody fully remote in 9 days, and the vast majority in 5 days. So it went from a 9 to 12 month out horizon to start the work to being done in 9 days. That part of that is the acceleration out of necessity. So, necessity is the mother of all invention. But also what I think comes from that is suddenly all those we can'ts become, oh wait, we just did. It's like, you sit here saying how hard it is and you can't get through it. And then because you didn't have a choice, you found a way to do it and you did it and it was robust and it's working and your business continues on. If you don't pause and say, oh, maybe we're a lot more capable than we thought we were, and we don't have to do things the way we've been doing it, then you're missing the real lesson here. It's not about working from home really quickly. It's about shifting your ability to deliver things that you thought you couldn't do anytime soon or were totally against. So that's the first one, is I think this is a great wake-up call if you're willing to look at it that way. The second thing, and this is a very unclear point, but it's around the demand shift. So for a lot of lines, I'm not so sure that the underlying economic activity will ever come back, or it will move to being something else. And so then the question is, what happens to that line of business? And the example, Tony was just having this conversation with your boss the other day, but around what happens to auto ownership. So, the Foresters of the world talking about autonomous vehicles and autonomous shared vehicles, and how like 5 years from now, no one will have a car. I don't know if they really said 5, but all the predictions are too aggressive. I think we all know that. Nissan said by 2020, they will have a fully self-driving car in the market, and hasn't happened. It's not because of COVID. So, everyone's been wrong in their predictions about that, but it will happen at some point. Even if it's 50 years from now, there will be a time where the entire fleet has changed over and people will not own their own cars. Some way, shape, or form. I don't think any of us will be alive or driving at that point. Maybe, maybe not. But that's what's been talked about. And so then what happens to personal auto, right? What we saw now is all of a sudden people aren't driving. And so, yeah, losses go down and people are getting like $9 back for the month of April or whatever, all the talk about it didn't amount to that much money for most people, but there was a shift in usage. What's really interesting to see is as companies realize, oh, we can work remotely and we can offer more flexibility, you then have 2 family cars that may not need to be 2 family cars anymore. My wife and I both work from home. I'm not commuting anywhere. She's not commuting anywhere. We don't have cars going in different directions at the same time, or ending up, parked somewhere like at the Alewife train station all day. Not that that's where I park, so I don't look for my car and key it. But that's not happening. So do we need to have 2 cars? So, her car's leased. When her lease is up, maybe we don't get another car. And there are a number of conversations like that going on as people no longer have to go back to the office. That's a big expense. Maybe we can make this work. And so even if it's not that big of a shift in car ownership, the average car per person in the US is 0.86. Even if that just goes to 0.8, or if it goes down to 0.75, that's billions of dollars of auto premium gone. Today, regardless of what happens with autonomous vehicles, I think that's very interesting to see. There's counterbalances to that, like people don't want to go on public transportation. So maybe I know people in New York who haven't owned cars in 20 years, just went out and bought a car. So there'll be some counters to that. And that's why I'm not sure what's going to win out. But I think long-term, this kind of interaction is going to be more normal than not. I think the travel industry is never going to be the same. Business travel will not recover 100%. I mean, Matt, it's your space, but I think leisure will get back there at some point. But I used to fly across the country to California for a 1-hour meeting with that carrier who we think we can close if we can just see him in person. Well, when you can't do that, no matter how much you want to, it changes your behavior, gets you more comfortable with it, and that then becomes the norm. People who never would have thought of doing things by Zoom, I'll just hop on the shuttle, go down to New York, back the same day. Would you really do that for a 1-hour meeting today? Even if it was safe and you could? No. So all that kind of stuff changes and starts to have knock-on effects in lots of, it's not just travel insurance, it's property insurance, it's E&O, it's workers' comp. I mean, everything that touches those industries starts to shift. So I think that there's a slightly longer term than what we're facing today impact on premium across lines. I think commercial lines, especially small businesses that are gone, restaurants and bars that don't survive. So, if you're a lot of that Main Street America exposure and BOP and GL and property, it's going to be a really interesting time, and other things will come up. New industries, new classes of business, new employment will come up in the same way they always have. And so there will be a recovery, but it will be into different things. And so then the question is, how are you preparing for that? And that's the third piece, is what investments can you make today that may not be about what you're doing today, like use-based insurance and sticking a dongle in your car. Most carriers who do that, that in and of itself is not a huge thing. It's not a huge business. You can learn a bit, but it's more about what you're learning than whether you've suddenly changed all the dynamics of your personal auto book. But you now have a front row seat to those families that are like, oh, we don't drive anymore. You're seeing that happen in real time. You're seeing how people are using their cars for different types of activities in their lives in real time. So you can then start to make decisions about, oh, should we be moving into product liability insurance? Because that's what autonomy really means. It's a commercial property and product liability story versus personal auto. So it's like you're seeing those shifts. And I think that's an interesting one. It's a longer term investment, but today is actually the day to start playing with those things. So really interesting and varied dynamics at play. I don't know how any of it's going to play out. I think it's incredibly interesting to watch it. So that's all we can do, but you can't sit on the sidelines. That's for sure. You do need to start to take some steps. And I think to the point about future employment in the industry and the work that Tony and the insurance nerds are doing to, excite people about this space, this is crazy exciting. The amount of data and the computing and the possibilities and the creation of wholly new ideas in an industry that hasn't historically seen that's really, really cool. And it's born of a terrible situation. So there's opportunity that I think is being formed right now that we still don't even know what it looks like, but it's a very interesting time.
Well, that was great. That was a great question to Frank, and a really insightful response. We're actually out of time, and I actually a minute over our allotted time today. So I know people have other things to do. So I wanted to thank you, Brian, for joining us. This was a great presentation. Thanks everybody for your engagement. Great questions. Thanks for being at this Insurance Library event. Just a couple of things that we have coming up at the library. Sarah, Maggie, you can correct me if I'm wrong, but we have a webinar on the sharing economy on August 10th. And then our next event that's sort of like this will be with Omari, who was here earlier, on August 27th. Oh, and then before that, we're partnering with the Griffith Foundation, with Frank's organization, on August 18th and 20th. We're going to have a speaker on some risk management fundamentals and looking at emerging issues. So we got a lot coming up in the coming weeks. So keep an eye out for those. And again, thanks for everybody for joining. Have a great day. Oh, Brian, I suppose people know how to find your book these days. It's available on Amazon and whatnot. I want to give you that.
Yeah, it's available on Amazon, and you can go to future-of-insurance.com to get more info. And Abby, I sent you a note in the chat. Shoot me an email and we'll get you a copy of it too. So Abby doesn't have to worry, but for the rest of you, every format, Amazon's the easiest place to find it, but it's also Apple Books and Nook and Google Play and Audible and all that.
Excellent.
Thank you guys.
Thanks, everybody.
Thanks for the time.
Thank you.
Thank you all.